Hi guys, thank you for being here. So I guess we'll go around and introduce ourselves first before going right to this session. So my name is Nine. I'm the venture with the Crypto Mind Labs, and what we have here is. Do you guys want to introduce yourself?
Yeah, sure. Yeah, nice to meet you guys. John here. So I'm the CEO of CyberK.io. So CyberK, what we do blockchain development as well as we help different project founders build a project. And I was previously the CMO for Solanium. So Solanium used to be a launchpad and still is a launchpad on Solana actually. Even though many interesting things happen in the Solana space, we are still bullish there. And I think it's been pretty fun. Yeah.
All right, thanks for having me. I'm Patrick. I'm the managing partner of Capital Sigma, a Singapore-based venture capital. And also, I am a lead advisor of Francium. So if anybody is on the Solana ecosystem, you should know Francium. It's the leverage yield farming protocol. Yeah, and I was also the ex-CMO of Atlas DEX, which is a cross-chain bridge built on Solana as well. And it was backed by Jump Capital. So over at Capital Sigma, what we do is we invest, of course, in blockchain-enabled companies. But what we do specially is because we incubate projects from the get-go. So be it marketing, talent searching, or even software development, we provide these kind of incubating services for the projects that we invest in. Yep, very happy to be here today.
All right, thank you guys for being here. So as this topic for the panel discussion is about how to find the next gem in the bear market, I think it would be great for us to discuss how we ended up in the bear market in the first place, but also how you guys cope with it and how you adapted to the changing market conditions and narratives. So, John, do you want us to start first on what's your experience like after the FCX incident with the Luna collapse, with the 3AC? How do you deal with the bear market and how do you recover both monetary and what in terms of the mental state of as an investor?
Yeah, no problem. Maybe before I start that, I can share a story with you guys. So I have a friend of mine, like he shared with me that he has another friend. This friend, he invested in ETH and Bitcoin in 2011, right? He didn't know he invested that much. So he checked his wallet in around 2020 and realized he's at around 80 million USD worth of ETH and Bitcoin then.
Wow.
So he liquidated that and got that in like hard cash, right? So at that point in time, he was thinking, okay, how do I make this a sustainable? It's a joke, right? So I mean, it's a story, but it's unfortunate. But I'll share with you guys. So what he did was he put some money into Luna, into Terra, in the Anchor protocol. So we know what happened then. So at that point in time, he was like, damn, I already put so much in, and okay, I have to be a bit more conservative. So he put half of it in Celsius. And so we know what happened to Celsius. They was like, okay, you know what? I'll just be fully conservative. I'll just keep my remaining cash into somewhere that I think is safe, and he put it all into FTX. So it's a series of unfortunate events, and shouldn't be laughing right now, but at that point in time, I was like, oh man, like it sucks to hear. And personally, I also have some funds in FTX, and my heart goes out to anyone else who are also affected as well. But I think in this whole bear market actually gives us a lot of time to breathe. In terms of meeting interesting people, actually building things that is important and interesting in this market, and to really really grow the whole industry and actually creating a real impact. So maybe I'll let Patrick share about what he is doing at this moment of time before I'll add on what we should be doing, especially in this the bear market situation. Yeah.
All right, thanks, John, for sharing. I'm not that friend. I don't have 80 million to lose. I hope I had, but sadly, no. I was actually pretty safe from the FTX situation, partly because John here gave me a tip-off that said that FTX were experiencing some issue. And where did he get the information? He actually got it from Twitter. I think that explains the importance of staying abreast with the latest market development and to know the news from the right people. So I think some of the people that are more in tune with the news, they actually got out of FTX, the saga with FTX, and some of them didn't because they believed in SBF when SBF said, hey, everything was safe, no worries. I mean, he was lying through his teeth, but my heart goes out to the people that were affected by the FTX saga as well. But actually, this is not the first bear market that I went through. So we have been in crypto since 2015. And I think back then we have the Mt. Gox issue, and followed by the ICO craze and the subsequent bear market that came. Just to share some lessons from the mistakes that I made in the past two bear markets that I've been through. I think the first mistake was to capitulate at the lowest. I mean, everyone, especially because we were starting early, when you're new to investments, you tend to invest emotionally. and you eventually capitulate at the bottom. So I actually have a record of myself selling Bitcoin at 4,000. That reminds me every time I log in to the exchange, it'll tell me, hey, 3 years ago you dropped Bitcoin at 4,000. And I don't want that to repeat again. So this bear market, what I tell myself, I have to be more strategic with the investments. And right now I'm heavy in stable coins, maybe like 95%. And I'm waiting for some form of correction. I don't think we have hit the most bottom of the market. There are still some chatter on Twitter. And from my experience, I think in the bear market, no one talks about crypto on Twitter. And I think lesson number 2 is more from a professional point of view. If you're building in a bear market, don't let go of the pedal. Keep going, keep pushing, as long as you can afford to. Because what you build in your bear market will come out stronger in the bull market. So a lot of investments that I made through our VC, the ones that did well were the people that were building through the bear market. And they found the product market fit, they found the right partners, they found the right customers in the bear market. And then they became a very successful brand in the recent years. So these 2 lessons are something that I want to share with people when we're dealing with the bear market that's coming, or we're already in it. Yeah.
Yeah, I think it's interesting that you mentioned both from the builder perspective and also from the investor's perspective, right? And as you guys have been to multiple bear markets, I think it also would be interesting for the audience for us to talk about how do you guys identify the next gems or the next upcoming projects which will emerge out of this bear market. So do you guys have any tips or any personal advice for the investors out there to identify like the next gems for the next bull market?
Yeah. If let's say we take a step back and understand like the question, right? Like the next gem, the purpose to find the next gem, of course, is to increase our underlying capital, right? To make sure that we grow along with the market with our initial capital size. But I was thinking about this question for a bit as well, and we realized that other than just purchasing like coins that we think that will go up multiple X, or of course buy like blue chip indexes, what are other ways that we can actually upskill ourselves in this current bear market that we can benefit out in the bull market? So before maybe I share about like what interesting narratives that are coming out, I think one thing, especially in this point of time where everything is a bit more mellow, we have time to all come together, like in this in Bangkok, to understand about the whole industry, things that us individually we can do to basically upskill ourselves, to position ourselves really well in the next bull market. Which some interesting things, of course, like understanding how tokenomics works, understanding like why some projects have some certain level of tokenomics, the inflation. Is basically you farming the only way, using tokens, is that the only way to incentivize people to be part of the economy, right? Is there other ways that we can do to really create a creators economy, an economy that basically doesn't have to rely purely on token price? Like things like that, if we can solve that kind of question, at the same time, of course, like learning how to code solid smart contracts, being a developer yourself to understand the importance of basically different layer 1's underlying technology. I think if you have that kind of fundamental knowledge, and you don't have to, of course, ideally you are good at developing it yourself, but if you basically understand generally what's the difference between like each layer 1's and what are the underlying technology, what kind of support you can get, I think this kind of frames your mind in terms of understanding like where are all these basically big founders, layer 1 founders are going in the direction, and from there definitely you'll benefit in the subsequent markets as well. So I think I said a lot about everything, but I think the long thing short is essentially upskilling yourself in this bear market. I find is actually more pivotal and more important than to find out what is the next narratives, because narratives change all the time, right? But if you have the skills, and then no one can replace that away from you. Yep.
Yeah, I think John made a really good point. Instead of finding the gem, make the gem, be the gem. But from my point of view, I also would like to give you guys something to take away from the conversation. So maybe I will share with you guys this framework that I use to assess investments. So I have these 4 key factors that I usually look out for in my investing decision. The first thing, which is the most important to me, is actually the revenue driver of the project that I'm looking at. So I need to find out like, hey, how does this project make money, and is it sustainable, and is the market that they're targeting something that will grow? And that tells me a lot about the sustainability of the project. Because right now, when you're picking projects from the market, let's say you look at Uniswap, if you look at Aave, you have to figure out how much revenue are they making from the protocol. So you can go to places like tokenterminal.com. They actually show you guys how much money the DeFi protocols are making on a daily basis. That helps you understand, like, hey, which are the protocols that are going to be around for the next 5 years. Then the next factor that I would like to look at is also, of course, the opposite of revenue, the cost drivers. I need to find out, for the money that they're making, are they spending more than they should? And if they are, is it for a proper cause? If not, then something's wrong with the project. And that's a red flag to me. And the third thing here is actually what I like to call utility, but some may understand it as a competitive advantage or moats. You have to look at the current protocols and think, can anybody like copy them? Because when you are successful, what you're always met with is copycats. And you're going to make sure your project has the moat or the competitive advantage. So some of the factors, or rather some of the elements of competitive advantage I look at are like their liquidity, their strategic partners, their existing customers, like switching cost. You have to figure out like, hey, if somebody comes in with the same idea, can they draw away the customers? And if they can't, I think that's a gem here. And last but not least, I like to look at the team. For me, there's a benchmark here that I always want to make sure that I hit. I want to make sure that the profiles of the team is always public, because then there will be credibility and there'll be accountability. So we have seen a lot of projects in the bear market. What they do is they abandon the projects. You don't want that to happen, because that means your investment's going to go to zero. So I think what is considered a gem has to be backed by a team that is willing to be public, and they have to come with their experiences. I mean, that's of course the cherry on top of the cake. Essentially, they have to be public. And if they are backed by prominent venture capitals or investors, I think that's a good sign as well. That's definitely a green flag, because it makes sure that there is somebody institutional keeping your team in check. Because if you don't have the VCs, this project founders can actually exit without facing any legal repercussion. And usually these are the VCs. So VCs are the people that would take legal actions against projects if they are underperforming or any breach on the contract or something like that. So to summarize everything, look at the revenue, the cost, how competitive are they, and who's behind the project. Yeah.
I think it's a really interesting framework, and I think it's very comprehensive in how you would take a holistic picture on evaluating projects and also teams, right? Are there any projects which come to mind which tick all 4 boxes right now? You think, is there any?
Any projects?
I think right now is like what Patrick mentioned. It's a lot more in investments from VCs become a little bit more into like how traditional companies gain investment from VCs, right? So instead of having just an idea and a huge TAM that I say I can target, right now is I need you to prove to me that you can actually target these individuals either by metrics like DAU, revenue drivers, stuff like that. Then I can project that as your valuation. So the question was what is the current projects right now that actually have such things? Not at the moment, to be honest. Like nothing that we have seen at the moment that or maybe nothing on our plate at the moment.
Yeah, not financial advice. I didn't want to shield any project, but if you guys want something safe, I think Uniswap has been around, RV has been around, and they have proven their market fit. They have proven their product market fit, and they are transparent about their revenue. So that's a plus for me. Well, we will never ever know exactly how they spend the money, but if they are transparent about their treasury, I think that is also a good sign. And of course, the team behind it, everyone knows who are they, and yeah, they have proven their worth. But all these framework, I would like you guys to take away with, especially if you guys are project founders, keep this in mind, because this is what the investors are looking for, especially about the top line, the revenue. Because right now we are no longer in a phase where we can pitch ideas and get money. People want to make sure that what they're investing in is something that will make money. If in the short run, in the long run, both time frame, you gotta start making money, and then they can justify their investment decisions. Yeah.
I think it's also a good signal of how the market is maturing, right? As people are pitching not only ideas but also traction. It's not enough for projects to just identify a potential market and then say that we'll be able to tap in. It's also about go-to-market strategy, about how they actually go about executing it, right? As John mentioned earlier. So I think it's really a very interesting point, and I really like Patrick's point about VCs keeping projects in check, right? Because having VCs on board of a project would then be allowing VCs to basically keep them in check, help them keep track of progress of key milestones and stuff, and also potentially take legal action if the projects decide to basically run away with the money.
Exactly. And I think right now, a lot of projects, they're practicing investors relations management. So it's a big word, but essentially what you're trying to do is to make sure that your VCs know what you're doing on a monthly basis at bare minimum. But some projects even go to a weekly basis kind of update. And in these short updates, what they do is they talk to the VCs and they tell them, hey, I'm looking to expand my market into for example, the Thailand market. Do you guys know any KOLs or growth hackers that can help me? So VCs are the people that can help you in these kind of initiatives, and you should keep a really close communication channel with your investors because your interests with them are aligned. And we are actually here to support you guys and make sure you guys are successful. Yeah.
All right, thank you, Patrick. So moving on to the next question, I think as we are discussing how to spot the next gems, right? With returns comes risk, of course. So how do you guys go about managing those risks as there's if you invest in upcoming projects, there's going to be more downside risk comparing to investing in key like large cap coins, right?
Yeah, I think so Patrick generally runs the bigger side of things, right? Like for me, I generally invest as an angel investment. So partly for me is I have a certain kind of direction or narrative that I believe in, as well as definitely like I know that okay, these founders are credible. There are people with tons of experiences, and they know what they're doing. They are able to do things that I personally cannot, right? And I think one litmus test that when Patrick shared deals with me is because what I do is I have a dev team, right? So if a project is something that I can replicate, and I don't think I can replicate it any worse than them, or like I will do it better than in fact, then it's not something that I will invest in, right? It's something that I don't know how to do. That definitely means that these individuals, they know something way more than I. Then that's something that I would personally invest in. And I don't invest much in terms of the size, but I think right now there's, especially for projects teams over here as well, generally they'll look for two types of investors, right? Financial investors and strategic investors. But financial investors are individuals that will just give you a big check, you run the show itself. Strategic investors will be people that can help you connect with interesting people to actually scale your product. I will consider myself a bit more on the strategic end, mainly because I like to be hands-on in the project, and that is actually how I'm working with Solanium initially as well. So initially I invested in them as a personal investment, and then from there I realized that I can just join the team and grow this together with you guys, right? So that's kind of my direction right now. Right now, of course, still invest here and there, but I think largely in cash. Main reason is because I think it's a time for us, like for everyone here, to upskill themselves and to build something interesting that can be used in the future as well. So I think most of this kind of I would say like dry powder will be used for picking up for any interesting blue chip coins as well as for personal investments.
Yeah, I really like the point about the litmus test from John. So for him, it's about the technical aspect, but for me, it's about the management aspect. So just a bit of background about myself. I was actually a management consultant back in the days before I went into Web3. So I've experienced working with all the C-suite executives and the higher management. So right now, I'm applying this, in a sense, this framework as well to assess the management team. So the litmus test for me is to see whether I would love to work with the management, whether I would want to join them as their advisor. And, that is a litmus test on the business aspect. And it goes well with John. And just to share one more framework about risk methodologies. So I will just share what I do at the VC. So for my VC, we assess 4 key areas. The first thing is market risk. So we have to care about, like, again, talking about the customers, whether you guys get the product market fit, and whether the market you're targeting, the total addressable market, you probably hear this around, whether it will expand in future. And that is essentially what we're talking about when we assess market risk. Now, the second risk that we assess is technological risk. So whether this idea is, dependent on any other tech stack, or whether it's sustainable, is this the place that people are developing on? And often I get my technical advice from John. So John runs a development company, and he knows best what are the market trends on software development. So I'll run my technical due diligence with John himself. Now, the third risk that I assess is, of course, financial risk. I will ask my projects at the prospects, can you show me your cash flow models? Can you show me your balance sheet? Because this tells me how financially sustainable you will be. and how prudent you will be with your spending. I need to know your runway so that I can be, I can trust your, of course, your decision as a founder. Now, the last risk that I look at is actually human risk. So this is a little bit similar to management risk that I mentioned at the start of the conversation. But essentially, I want to know what kind of person are you as a founder? What kind of experience do you have? And if you don't have experience, I want to see the drive. And because I know with drive and the right people, with the right mentality that you can let yourself be somebody at the back and you lead a team. You need a level of humility to lead a strong team to make your idea a success. If I see all these characteristics in the founding team, I think that's a green flag for me. So these 4 risks: market, financial, technical, and human, the risks that I assess from a VC's lens. Yep.
I think it's you take a more. I think it's from your background as well, right? From a management consultant point of view, that you look at projects almost like investing in like a Web2 business and looking at from the market perspective, looking at the actual team and how they execute and also how they go about managing their businesses, right? And just to segue onto our next question, right? So the next question is, which sector do you think would be the upcoming narrative or the upcoming long-term play in terms of the next boom market that's maybe coming in the next few years or whatnot? So which sectors are you guys interested in about, and which sectors are you guys planning to go into?
Yeah. So I'll start. So right now, if you guys share about you guys are doing blockchain to your relatives and friends, I think one question more often than not they'll ask is, so what's the use case, right? So what can I do with this? What can I do with Bitcoin? What can I do with Ethereum, right? So what's the whole purpose of blockchain in general or cryptocurrency, right? Or you get ideas like, what's the difference between cryptocurrency and blockchain? I think personally, and I fundamentally believe in the next narrative will be basically the usability. I think something that I'm not so sure by you guys opinion is, but it's like, why can't I use my Ethereum and buy a cup of coffee in a way that it can be fast? It's fast and it's not going to be very troublesome. I won't need to increase my gas fees in order to buy a cup of coffee, and there won't be any congestion, stuff like that. And all these problems are technical problems that can be solved down the years, right? So it's going to be very interesting to see. And I think there's one in Singapore at this FinTech festival. We have basically we were actually encouraged to use this app called Sequence.app. And what they do is essentially they allow you to buy coffee with like merchants working together with basically a website that they have basically your SGD inside as well. So I think innovations like that is going to be very interesting down the road, and essentially integrating blockchain and maybe cryptocurrency into the whole what we do in our everyday lives is going to really change the scene quite a bit, in fact. But I think in the short term right now, what I observed in terms of trends is, of course, like very interesting layer 2 roll-ups, as well as those kind of new narratives in the new layer 1 blockchain. Personally, I listen to a lot of, and what I encourage everyone to do is to listen to interesting podcasts. I'm a huge fan of Bankless and Up Only, and I do listen to them on like a weekly basis. And with that, I actually do kind of like understand the kind of latest news if I don't use Twitter all the time. And yeah, I think from there, I kind of understand what are the latest trends, as well as what are people looking at the moment, and things like that. Yeah.
Yep. Thanks, John, for going first, because this is a tough question. I was trying to formulate my thought as well. So I resonate with what John has shared, especially on the part about addressing the friction for on and off ramp of your fiat money. So in a sense, like changing Thai baht into USDC, that kind of friction that you want to address that. Because let's take a step back and think about it. Do you guys, would anybody actually pay attention to how debit or credit card works? We don't really care. We just tap our card and we let the POS communicate with the banks and the merchants and then let everything happen. So this is something that we want to see on the crypto side, especially with payments. So in a sense, payment solution might be the thing that might move the market for further adoption. So I think just a few weeks ago, Vitalik came down to Singapore. He gave a speech, of course, about sharding and the new tech on the Ethereum layer. But I think one thing that I had a takeaway from what John has shared with me is that he was also really looking forward to the days where we overcome this friction with payment solution. Because like what John has shared, buying coffee with Ethereum, that itself sounds really, it doesn't sound very intuitive to our end users, the mass users. We just want to know how can I convert my Thai baht, my Singapore dollars into something that I can spend. And if the back end is handled by the blockchain technology, I don't need to care. I just need to know that it's working. Yeah. So this is the sector that I thought it's pretty promising, which is the payment solutions. Yeah.
So it's almost like using blockchain as an enabler to solve actual pain points rather than force-fitting the actual technology itself onto things which may not work for the end consumers, right? And I think what both of you said is really interesting in that there is, I think the term would be to humanize blockchain, right? To basically put the blockchain in the backstage and let it do its thing, and the end consumers or the end users doesn't necessarily have to interact with the blockchain, but just to utilize the benefits of it and help make the onboarding process easier, right?
Exactly.
Yeah.
Oh, yeah. Sorry, just to add one more thing about what you have shared. You have to do it in a way that your users don't know that they're using blockchain. That is the only way, or I wouldn't say only, that's a bit extreme, but that's one of the best way to do it. Because right now, if we talk about cryptocurrency, if we talk about blockchain, the general census is, it's a scam or whatever. It's negative sentiments that people are having. So you don't want to mix your brand with the wrong idea. You don't want people to think that, hey, I'm just building something and adding blockchain to it. So taking this point into example, for GameFi, when we're playing games like MapleStory, when we're using Akash, we don't need to know how the in-game currencies are being handled, the economies. We just let it happen. But right now, what we're observing with GameFi is we are talking about the tokens first before the game. And we already know by that, the things are being done in a wrong way. So we should build the games first, let people enjoy your game, and when they interact with your in-game currency, they don't need to care if they are doing something with a blockchain currency. They just need to know that they can buy their best in slot items for their RPG. Yep.
Yeah, I think like what Pat mentioned about that as a game, the game side we believe in experience more so than focusing on the token itself, and definitely resonate with that a lot. I think also wanted to share as well, and something that you guys can consider is. One thing is essentially the payment. Right now, that basically buying coffee with cryptocurrency can be done with, let's say, a crypto.com card, right? Like a crypto debit card or credit card. But why can't we do that using a decentralized exchange, right? And that's something that I've always been considering. Like, why can't we do that yet? And of course, like comes in with AML and without doing KYC with decentralized exchanges, that might cause that kind of issues. So I mean, that's one thing that if that can be solved, it'll be very interesting, right? So essentially, I can buy a coffee with like MetaMask in a way that no one knows I'm actually paying with cryptocurrency. So that can be one interesting. Another thing is, of course, like the reason why, at least personally for me, I got interested in cryptocurrency is the whole idea of remittance, right? There are some countries who they are not as easily accessed to basically remittance kind of services. And initially, the whole idea of blockchain is I allow you to find fast remittance. And transfer money from one person to another. I think right now it's really that off and onboarding of this kind of currencies is something that being focused a lot right now. And then I think someone is working with circles on that actually. So that can be a very interesting idea or that direction to explore. Yeah.
Right. Before we conclude this session, I think it's been great to talk to you guys, and I wish we had more time to discuss these things, right? But before we go off, do you want to leave anything for the audience for potentially people to connect you guys with, like after the stage?
Yeah, so thanks guys for this. You can always reach out to me at John on LinkedIn. I hope like whatever we share is, I think it's very different from what we originally planned to do with a script or whatever. Like for us, it's really just bouncing off ideas. I think at this point of time, we don't know what works, right? But I think ultimately, sharing ideas with one another, networking, meeting interesting builders, interesting people, regardless of age, regardless of experience. I think it's all part of the process, and yeah, let's enjoy this together.
Yep, and thanks for having us. It's really a pleasure speaking to everybody. So, a parting message for everybody is, even though we run a VC, we are not the traditional kind of VC. We actually open our eyes to everybody. We believe everybody has a shot in it. So if you have an interesting idea to pitch to me, my ears are open. And you can find me on LinkedIn. I think there's probably some ways to find our LinkedIn later. Yeah, love to hear about your ideas and find ways to help you. We don't have to do it in a commercial manner. I always love to give like advice. If you wanna, if you want some, it's always a good for us to share with you the insights that we have gathered from helping so many projects in the space. Yeah, so please feel free to reach out to us. Yeah.
All right, thank you so much, guys, for joining the panel, and I hope it was helpful for the audience. And let's conclude this session. All right, thank you, guys.
All right, thanks, guys.
Thank you.